There are two people looking at the same $700 monthly car payment. One sees a car. The other sees 5 years of his life. He sees the mornings he may have to spend at a job he hates because the payment has to be made, the apartment he can't leave, the business he can't start, the emergency fund he never builds. To everyone else, he's buying a car. He doesn't realize he's also buying a smaller future dot. That's the strange thing about money. We think we're spending dollars, but most of the time, we're spending time. That phone payment, the apartment upgrade, the furniture you financed, the car you said you could afford, none of them felt like a major decision. That's what makes them dangerous. Financial pressure rarely arrives looking like a disaster. It arrives as another manageable monthly payment. At 27, you don't think about your 47-year-old self when you're standing in a showroom. You think about what you want today. At 32, you don't think about whether you'll want to leave your job 10 years from now. You think about whether you can afford the nicer house. And eventually, the payments become so normal that you stop seeing them as decisions. You start calling them your lifestyle dot. Imagine earning $90,000 a year but spending almost every dollar just to maintain the life you've built. Now imagine someone earning $65,000 who drives an older car, lives in a smaller apartment, and automatically invests part of every paycheck. From the outside, the first person looks richer, but the second person is quietly accumulating something far more valuable: dot options. The ability to leave, the ability to wait, the ability to survive a bad year without begging your future self for help. And there's a number hidden inside your monthly expenses that can tell you exactly how much of your future you've already spent. Once you see it, you'll never look at a $700 payment, or any payment, the same way again. The number is simpler than you think. Take everything you have to pay every month before you make a single choice: rent, car, insurance, loans, subscriptions, phone, minimum debt payments, and add it together. That number is the price of maintaining your current life. Now ask yourself a different question. How many months could you survive if your paycheck disappeared tomorrow? That's where the difference between income and freedom starts becoming visible. Two people can earn the same $80,000 and live completely different financial lives. One has $3,800 of fixed monthly commitments before food, gas, or anything unexpected. The other has $2,100. The first person needs their paycheck just to remain where they are. The second person has room to breathe. That gap doesn't look impressive on a spreadsheet, but over 5 or 10 years, it can become enormous. One person is constantly trying to earn more. The other is quietly buying back pieces of their future. This is why raises can be dangerous. You get an extra $500 a month and think, finally, I can afford something better. A nicer apartment takes $200. A new car takes another $250. The rest disappears into better restaurants, subscriptions, and little upgrades. Your income increased by $500, but your freedom increased by almost nothing. You didn't give yourself a raise. You gave your lifestyle a raise, and the most expensive purchases aren't always the ones with the biggest price tags. Sometimes they're the ones that create a permanent obligation. A $5,000 vacation ends. A $700 monthly payment doesn't. A dinner disappears the moment you leave the restaurant. A 5-year loan follows you home every month. The question isn't whether you can afford the payment. The question is what that payment prevents you from doing later, because every recurring expense is a tiny piece of your future that you've already promised away. And once enough of those promises pile up, something strange happens. You can make more money than ever before and still feel like you're running out of it. There's another reason people keep spending their future, and it's harder to calculate than interest. Other people, you see your friend buy a new car, and suddenly yours feels old. Someone moves into a bigger apartment, and your place starts feeling too small. Your coworker gets the newest phone, and the one in your hand suddenly feels outdated even though it works perfectly. Nothing about your life actually changed. Only your comparison did. This is how lifestyle inflation often begins. Not with greed, with discomfort. You earn more, and instead of asking, what do I actually need? You ask, what should someone earning this much have? That's a completely different question. At 25, you might be perfectly happy spending $1,500 a month. Then your salary doubles and suddenly spending $3,500 feels normal. Your income increased, but your definition of normal increased with it. 5 years later, you're making more money than you ever imagined and wondering why you still don't feel ahead. The dangerous part is that nobody congratulates you for keeping your lifestyle small. Nobody sees the investment account growing quietly. Nobody gives you a trophy for driving the same car another 3 years. Your co-workers see what you bought. They don't see what you didn't buy. And that's why financial progress can feel like failure in the beginning. You're making decisions that improve your future while everyone around you is making decisions that improve their present. Then one day, something happens. Maybe your company lays you off. Maybe your parents need help. Maybe you finally realize you hate your job. Maybe you simply wake up and understand that you're 40 years old and have spent your entire life waiting for the next paycheck. That's when the difference becomes visible. The person with the expensive lifestyle doesn't just lose income, they lose options. The person with lower expenses loses a paycheck. Those sound like the same problem. They aren't. The strange thing about financial freedom is that it usually doesn't begin with making more money. It begins with making fewer promises. You cancel the payment you don't need. You keep the car another year. You stop upgrading your phone because a new model came out. You move some money automatically before you have the chance to spend it. You build an emergency fund. Then you do it again next month. Nothing dramatic happens. That's why most people quit. There is no moment when the music starts and someone tells you that you're becoming wealthy. Your account simply gets a little larger while your list of obligations gets a little smaller. And slowly, something changes that has nothing to do with the number in your bank account. You stop being afraid of ordinary problems. A flat tire becomes an inconvenience instead of a financial crisis. A bad month at work becomes uncomfortable instead of terrifying. When your boss says, "We need to talk," your first thought isn't automatically, "What happens to my rent?" You're buying back the ability to wait. And waiting is incredibly powerful when you aren't desperate. You can turn down the wrong job. You can negotiate instead of accepting the first offer. You can move closer to family. You can take 6 months to learn something new. You can help someone you love without destroying your own finances. None of those things appear on a bank statement, but they're wealth. Because the real purpose of money isn't to give you more things to look at. It's to give you more choices about what happens next. And this is where the math becomes uncomfortable. Every time you choose a permanent expense, you're not just deciding what you can afford today. You're deciding how much freedom your future self will have tomorrow. Years from now, you're going to meet a version of yourself you've never seen before. Maybe you're 45, maybe 50, maybe 60. That person will inherit every financial decision you're making today. The car payment, the house, the debt, the investments you started, the investments you never started, the things you bought because you wanted them, and the things you didn't buy because you decided your future mattered more. That future version of you won't care whether your neighbors thought you were successful at 30. He won't remember whether you had the newest phone or the nicest car in the parking lot. He'll care about something much simpler. How much freedom did you leave me? Maybe you gave him a life where every month is already spoken for, where one unexpected expense creates panic, where leaving a bad job feels impossible because too many payments depend on the next paycheck. Or maybe you gave him something completely different. A paid-off car. Investments that kept growing while you slept. A year of expenses sitting quietly in the bank. A lifestyle that never became so expensive that it trapped you. The difference won't come from one giant decision. It will come from hundreds of tiny ones that nobody noticed. That's the part people misunderstand about wealth. You don't build it only when you make money. You build it when you decide what your money is allowed to become, because every dollar you spend disappears into the past. But every dollar you keep can become part of your future. So the next time you're about to make a purchase, don't only ask, "Can I afford this?" Ask the harder question. What future am I giving up to have this now? Because you may think you're buying a car. You may think you're buying a house. You may think you're buying convenience, comfort, or status. But underneath every purchase is a trade. Money for time. And the most expensive thing you can ever spend is a future you haven't lived yet.